The Canadian dollar is up over 2% against the US dollar in the month of November. Now, much of the story centers around general dollar weakness as inflation in the US appears to be moderating, bolstering the market's belief that the Fed's hiking cycle is over and that rates may soon begin to move lower. Now, this narrative has pushed the dollar lower against most of the world's currencies, down over 4% against the basket in the time period. Now, the Canadian dollar has had a more muted rally than most. Now, interestingly, crude oil has traded very poorly over the last 2 months, down 16% since late September and down 5% in November. Now, the Canadian dollar generally has a strong positive correlation with oil prices because of its export relationship with the U.S. And from late 2022 through May of 2023, that relationship held up pretty well. However, since June, the relationship appears to have deteriorated some. The question is, can the Canadian dollar continue its rally against the U.S. dollar in the face of persistent crude weakness? Well, part of that question may be answered tomorrow on November 30th when we see the PCE inflation data. If the number comes in higher than expected, it could reverse the dollar's general slide and drag down other currencies with it, perhaps disproportionately affect the Canadian dollar because of continued crude weakness. Now, the CME offers 3 different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micros in these examples. If a trader believes the Canadian dollar could fall from here, they could express that by selling the December micro Canadian dollar futures contract at 0.7360 and target a move to the November low of 0.7200. Now, a stop for this trade can be placed above at 0.7480. This trade can make $160 if the target is reached and risks $120 if you're stopped out of your level. Now, if a trader believes the Canadian dollar could rally from here, they could express that by buying the December micro Canadian dollar futures contract at 0.7360 and targeting a move to the July highs of 0.7650. Now, a stop for this trade can be placed below at 0.7160. This trade can make $290 if the target is reached and risks $200 if you're stopped out of your level.